London. March 21st, Reuters. Oil prices rose on Friday and were heading for a second consecutive weekly gain as fresh US sanctions on Iran and the latest output plan from the OPEC Plus producer group raised expectations of tighter supply. Brent crude futures were up 12 cents or 0.2%, $72.12 a barrel by 0850 GMT. US West Texas Intermediate crude futures rose 15 cents as a low 2% to $68.22. On a weekly basis, both Brent and WTI were on track for gains of more than 1%, their biggest since the first week of the year. The United States Treasury on Thursday announced new Iran-related sanctions, which for the first time targeted an independent Chinese refiner among other entities and vessels involved in supplying Iranian crude oil to China. New U.S. sanctions against Iran's oil exports triggered Thursday's rally in oil prices, along with the OPEC Plus pledge to compensate for overproduction, said PVM analyst Thomas Varga. Thursday's announcement marked Washington's fourth round of sanctions against Iran since U.S. President Donald Trump in February promised maximum pressure on Tehran and pledged to drive the country's oil exports to zero. Analysts at ANZ Bank said they expect a 1 million barrels per day BPD reduction in Iranian crude oil exports because of tighter sanctions. Vessel tracking service Coupler estimated Iranian crude oil exports above 1.8 million BPD in February. Oil prices were also supported by the new OPEC Plus plan for 7 members to cut output further to compensate for producing more than agreed levels. The plan would represent monthly cuts of between 189,000 BPD and 435,000 BPD until June 2026. OPEC Plus this month confirmed that 8 of its members would proceed with a monthly increase of 138,000 BPD from April, reversing some of the 5